Hey guys, heading into today's video, we're going to be doing an easy example here, or a relatively easy example, I guess, of filling out a Form 1065 U.S. Return of Partnership Income. I'm a small business owner myself. I fill out one of these forms every year. I haven't had any issues with the IRS, and I don't have to go through a tax professional, which saves me a little extra money. But I also have a pretty simple, straightforward particular business where I use cash accounting. I don't have a bunch of deductions, depreciation, all that kind of stuff. So for the majority of you out there, you're probably going to be able to fill out one of these forms for yourself if you're just running a basic LLC partnership. And then you can save yourself a bit of money by not having to go through a professional. But if you do run a more complicated business with all of those accrual accounting, accounts receivable, depreciation, deductions, all that kind of stuff, you're probably going to want to go with a tax professional. But we're going to be running through this example here of just what the majority of, probably most of you, are going to have to fill out in terms of a Form 1065 for your particular business. It's a pretty long form here. A lot of this stuff isn't going to apply for most of you. I'm going to try to touch on those without having to go into too much detail here. But to start off, you're going to be beginning the calendar year here for January 1, 2017 and ending December 31st, 2017. And then the principal business activity for today's video, we're just going to say that it's going to be landscaping services. And your principal product or service, it can be, any of 1,000 different things. If you want to look up on Google, you can look up your principal business activity and find your business code number pretty easy, but we'll say that our principal product or service is going to be mowing lawns for this example. And I looked up this code on Google and it was 561730. And then over here, you're going to put the name of your partnership that you've registered. So for this example, we'll say mowing 12345 LLC. And then write down your street address and number, and then the city, town, state, zip code, all of that good stuff you can fill out there. And then your employer identification number. This is going to be something that the IRS sends you when you're starting your business or just getting going. I just recommend going on Google, finding the employer identification information. You send some stuff over to the IRS, and then they'll get back to you within due time with some information and your employer identification number. So we'll just make one up for this video. All right, the date your business started, this is just going to be whenever you started your particular business. And for today's example, we'll say that we started on January 1, 2017. And total assets, most of you aren't going to have to fill out anything in this particular box. If you, again, have a more complicated accrual accounting, accounts receivable, depreciation, all this other stuff, this is probably something you're going to need. We'll get into more detail on that as we work our way through this video. But again, if you do have some of this more complicated stuff that we're going to kind of gloss over a bit in this video, I do recommend hiring a professional. But again, like I said, most of you are just going to have cash accounting, pretty basic stuff. You should be able to fill out this form yourself. But working on down here to section G, check all of the applicable boxes. So since we started our business during this particular tax year, it's going to be our initial return. But if you've already been in business for a number of years, you're not going to need to check that. Is it your final return? Do you have a name change, an address change, an amended return, technical termination? If any of those apply, be sure to check those respective boxes. Section 8, check the accounting method. For my personal business and for this example, we're just going to be doing cash-based accounting, which means you count the money when you get it paid to yourself and you deduct the money when you send it out with expenses or payments or whatever. It's a really simple, easy way to go about keeping track of things. Accrual, a little bit more complicated way to do things. If you have a bigger business and a bunch of employees and a bunch of equipment and depreciation, all this extra stuff, you might want to go that route. And if you've hired an accounting professional or a tax professional, you might want to go that way as well. But again, most of you, just a simple, basic LLC partnership type situation, I do recommend just doing a basic cash type of accounting. It's a real simple way to keep track of things. All right, moving on down here to section I, number of schedules K1, attach one for each person who was a partner at any time during the tax year. So who's ever a partner in your business, you're going to fill out a K1 and send it to them. For this example, we're just going to say we're a 2-person business. Pretty simple. Each are going to be 50% owners in this particular landscaping services mowing business. And then J, check if Schedule C, M3 are attached. Again, most of you are not going to have to do this, so we're not going to check that for this simple example. Moving on down. All right, so 1A, your gross receipts and sales. This is going to be all of the services you sell or products you sell, all of that money that you've brought in throughout the course of the year, you're going to post in your gross receipts or sales. So we're going to say that's going to be $100,000 for the purposes of this example. Returns and allowances, this is going to be if somebody paid you for a service and then maybe they found out they didn't like the service or something went wrong and you had to refund part or all of the money that they paid you, those types of things, that's going to go in this section. So let's say for the year that amounted to $5,000. 1C, you're simply going to subtract 1A from 1B, and that's going to leave you with $95,000 for this example. And then cost of goods sold. These are going to be all of the expenses that you run into. This can be things like maybe you pay for accounting software, or you bought some equipment for your business, or let's say you take payments through PayPal and PayPal takes a percentage cut of that money. So that's another expense and a cost of goods sold. So all of those expenses that you had for your business, you're going to put in this particular area. Let's say that amounted to $15,000. All right, so then we're going to subtract lines 1C and 2, and then we're going to get our total gross profit here, and that's going to be $80,000. All right, so now a lot of these things to fill out the rest of this page. Most of you probably aren't going to have anything, but I will go through each of these lines and discuss it a little bit. But for example, my particular business that I run, I never fill out lines 4, 5, 6, or 7. And I also don't fill out lines 9 through 21 because I don't have any particular deductions for my simple online-based business. But running on through these here, ordinary income or loss from other partnerships, estates, and trusts. Most of you aren't going to have to fill that out. Net farm profit or loss. If you're not a farm, you don't have to worry about line 5. Net gain or loss from form 4797. Again, most of you aren't going to have to worry about that. This is going to be things like selling machinery, or maybe you have a automobile vehicle or something that you sold. Again, most of you probably aren't going to have to worry about that, but if you do, be sure to fill out and attach form 4797. And then line 7, other income or loss. These are going to be anything that hasn't been listed thus far that you need to post here. Again, most of you aren't going to have to worry about that as well. And then line 8 is just going to be the total income or loss. So you combine lines 3 through 7. And since we didn't have anything in lines 4, 5, 6, or 7, that's going to be pretty simple there. It's just going to still be $80,000. And now we're going to move down to the deductions section. Again, for my basic, easy business where I don't have any of these particular things, I work out of my house, and I just don't have any of these deductions. Some of you might have some of these, though, so we'll go through them. If you have salaries or wages that you're paying to people that aren't partners in the business, so employees, you can deduct that from your total income. We don't have that with this example. Again, this example is just going to be 2 general partners without employees. The next line 10 here, guaranteed payments to the partners in the business. So for this example, we have our 2 partners. If they get guaranteed payments, let's say on a bi-weekly basis or a monthly basis or something, you need to take that into the deductions here from your total income. But let's just say you pay out people in your business just based on when you get money, and they're not guaranteed at any point in time. You just kind of pay yourself out whenever you feel like you can take money out of the business. then you're not going to have to worry about putting anything into this particular box. 11, repairs and maintenance. Let's say you have a computer breakdown or a hole in the wall or a number of other things where you have to pay for a repair and a maintenance. Now, this does not include normal depreciation. Again, most of you probably aren't going to be doing an accounting method where you factor in depreciation. So again, this doesn't have to do with depreciation. This is if something breaks and you have to repair it and getting it back to normal running function. That's something that you can deduct. And moving on down here to line 12, bad debts. This is going to be, let's say you did some work for somebody and you know they're never going to pay you. You can deduct that as a bad debt. Again, most of you probably aren't going to have to fill out that as well. Rent, let's say you rent an office space. You can put that as a deduction here. For me personally, I work out of my home. And let's say for somebody that runs a lawn service business, they're probably working out of their home where they don't need an office space. So you're probably not going to have anything for the rent in that scenario. But if you do rent an office building, you can deduct that. Taxes and licenses, let's say you need a license, like if you're a realtor or maybe a property taxes or things like that you need to pay, then you can deduct those things as well. You can deduct interest payments. So if you have a loan for any reason that you're paying off and you're paying interest on that loan, you can deduct that. And now we get down to depreciation, which is kind of a tricky, complicated thing. Again, if you're running a business where you have depreciation, I recommend hiring professionals to take care of your taxes and accounting and things like that, because it can get pretty complicated. But for this example, we're not going to do depreciation. And also depletion is another thing that's similar to depreciation. Most of you aren't going to have to worry about that either. Retirement plans. If you have anything in your business where you're paying into retirement plans for employees or members or things like that, you can put that here. Employee benefits program like health insurance, things like that. You can put that here. Again, most of you probably aren't going to have this particular stuff, but some of you might. So if you do, make sure to put that in here on your deductions. And then anything that hasn't been mentioned thus far that you can count as a deduction, you put in the other section, line 20, and then attach a statement. And then 21, you're going to add up all of your deductions. And for us, for this example, and for my real world business, I don't have anything in the way of any of these deductions. So that's just going to be a big fat 0. And then ordinary business income or loss is basically just going to be taking your total income and subtracting the deductions. And then that's going to be what you enter into box 22 here. So for this example, it's simply going to be $80,000. And now we get down to the area where the signature of the partner or limited liability company member, so you yourself can sign that here, date it. If you are hiring this work out and having a tax professional do this for you, then they're going to have the paid preparer fill out this particular section over here. And then this little box right here that says, may the IRS discuss this return with the preparer shown below. This is, again, only for people that are paying to have their information filled out here. If you want the IRS to discuss things with the preparer shown, you click yes. If not, no. But if you're doing this yourself, you don't have to worry about checking yes or no for that box. All right, guys. So now we are going to move down to where there is a lot of written information here. It can look a little bit daunting, and we're going to be quickly working our way through a lot of this stuff. There's only a few sections where you really need to focus in on and check yes for. And that's going to start with the first box here. So what type of entity is filing this return? Check the applicable box. Most of you are probably going to be a domestic limited liability company. That's what my personal business is. That's what this example is going to be. Again, a lot of these boxes, the vast majority of you are going to check no. A lot of these are going to have to do with foreign entities or just a bunch of really complicated stuff that most just small business, domestic LLCs in the United States aren't going to have to worry about. But box 2 here, at any time during the tax year, was any partner in the partnership a disregarded entity, a partnership including an entity treated as a partnership, a trust, an S corp, an estate other than a state, or a deceased partner, or a nominee or similar person? For most of you, this is going to be no. Moving on down here to the next section, 3. This is something that you are going to have to focus in on here. Most of you are probably going to check yes for B and no for A, but quickly to read through this. At the end of the tax year, did any foreign or domestic corporation, partnership, trust, or tax-exempt organization, or any foreign government own directly or indirectly an interest of 50% or more of the business? Again, most of you are going to click no for that box, but most of you are probably going to click yes for B. So section B is, did any individual or estate own directly or indirectly an interest of 50% or more in this particular business? So for our example, we're doing a 50-50 ownership here with just two general partners in this business. So since two people own at least 50%, then this is going to be yes for box B. If you don't have two people that are 50-50 partners, maybe you have one person that owns more than 50% of the business, then you're only going to have one person that you list on a Schedule B1 form, which is another form that's pretty simple to fill out, that you're just going to write down that information and then attach it to this as well. But again, most of you are probably going to be checking yes here for 3B, but not 3A. All right, moving on. Section 4 here, again, most of you are going to be clicking the no boxes here for A and B. It's just at the end of the year, did the partnership own directly 20% or more, or own directly or indirectly 50% or more of the total voting power of all classes of stock? Again, you guys aren't going to have to worry about this more often than not, but if you do, again, these are the type of things where I recommend you going with a tax professional. Moving on down here to box 5. Did the partnership file Form 8893 election of partnership level tax treatment or an election statement? Again, this is going to be another one of those things that almost all of you aren't going to have to worry about. If you did do this, you will know, and you'll click yes for this box. All right, moving on here down to number 6. Now, this is going to be another thing that you want to focus in on. It's going to be an important part here. Does the partnership satisfy all 4 of the following conditions? So first and foremost, does the partnership's total receipts for the tax year, were they less than $250,000? For most of you, that's going to be yes. The partnership's total assets at the end of the tax year were less than $1 million. For most of you, that's going to also be yes. And then the Schedules K1 are filed with the return and furnished to the partners on or before the due date, including extensions. Again, these are just going to be filling out those K1 forms and distributing them to all of the partners in the business. So again, that's going to be yes for most of you as well. So if A, B, and C are all yes, then you're going to move on down here to D, where it says the partnership is not filling and is not required to file a Schedule M3. So if A, B, and C were all yes, which for the vast majority of you watching this video, that's going to be the case, then you go ahead and click this little yes box here next to D. Now, if any of these were no and you have a bigger business that's bringing in a lot of money, then you would have to click no, and then you're going to have to fill out Schedules L, M1, M2. But if you did click yes in this box, then the partnership is not required to complete all of these extra schedules, which makes things a lot easier, more streamlined and straightforward. And if you do click yes in this particular box, then you're much more likely to have success and be able to fill out this tax form yourself without too much issue. So now we have a number of other things here that we're going to continue to run for. For my personal business, I answered no from 7 all the way through 17. You know, a lot of this stuff is not going to apply to the vast majority of people watching this video. I do say that you should probably read through these and see if any of them apply to your particular small business. But again, almost to everyone, I mean, these are going to be things like foreign entities and foreign banks and all this other stuff that just a small LLC partnership isn't going to apply. So we're going to go ahead and just run through these. All right, so then we're going to get to 18. This is where you might actually have to fill out something here in the yes column. So did you make any payments in 2017 that would require you to file Forms 1099? So these would be things like contract work, for instance. If, let's just say for this landscaping, lawn mowing business, we needed to hire out some contract work and get some help. And if that amount was over $600, then we have to fill out a Form 1099. So we'll click yes for that here. And if yes, did you or will you file the Form 1099? Again, this is kind of a dumb question. If you need to fill out a Form 1099, then you absolutely should do it. So you should click yes for that box as well. But if you didn't hire out any contract work or need to do anything with Forms 1099, then you can check no for those boxes as well. And then again, 19, 20, 21, 22, these are all things that I never have had to fill out for my personal business. Most of you aren't going to have to worry about this stuff as well, but be sure to read and double check it just in case. Now getting to the end here, another thing that you just have to sign your name and fill out and date. So that's pretty straightforward there. All right, now moving down to Schedule K. This is just going to be bringing things down and filling out that you had filled out in these boxes up here. So all of these boxes that apply, you're just going to drag down and bring through to your Schedule K. So since ours is just really simple, we didn't have all of these deductions and credits and foreign transactions and all of these other things. Ours is pretty simple. It's just going to bring down that $80,000. And our simple example, we didn't have any of these other things, but if you did have to fill out any of these other things in the earlier portion of this Form 1065, then you need to bring those through as well. All right, so scrolling on down here, we're getting kind of to the end of things. All right, so for the net analysis, income here or loss, you're going to bring through from your K1, or excuse me, from your Schedule K, and you're going to fill that out. So it's still going to be $80,000 for our simple example here. And then analysis by partner type. So how much each of these particular either general or limited partners got paid out of that net income. So for our example, we have 2 general partners in our lawn mowing business. So that's just going to be all of that $80,000 is going to be getting paid out to the partnership general partners. So pretty simple there. Be sure to fill out whichever box is for your particular business, but it's probably going to be paying out general partners in this instance. And then again, Schedules L and M1 and M2, this correlates back to that Section 6 of Schedule B right here. And for those that clicked yes in this box, you're not going to have to worry about filling out those Schedule L1, L, M1, and M2. If you do have to fill out those boxes, again, I do recommend more likely than not having to go through a tax professional to make sure you're getting everything done properly. But if you're just a basic, easy, cash-based, small LLC partnership, you're not going to have to worry about all of that extra stuff, and filling out your tax forms is going to be much easier. And again, this is just more of an informational type form here. You're not actually going to be paying taxes on this particular form. What you're going to do is take those K1 forms that you're going to fill out and distribute them to the partners, and then the partners are going to take those K1 forms and pay taxes on those on their own personal taxes. So this is just more of an informational type form here that you're not paying taxes on. It's going to be going to those K1 forms that you're distributing to your partners, and then they're paying those taxes on their personal taxes. I think I just repeated myself twice there, but it's an important thing to note, and definitely that's basically going to be the end of this video, guys. I hope you were able to learn something and kind of get a general idea of the process of how one of these forms is filled out. If you have just a simple business, you should be able to fill out these taxes yourself, maybe save yourself a little extra money. If you don't feel comfortable doing that, or you're a more complicated business with depreciation, deductions, accrual, accounting, all of these other things, having foreign entities, or more than $1 million in assets, things like that, then I do recommend going through a tax professional. But otherwise, the vast majority of people should be able to fill out this 1065 form themselves, and then fill out those corresponding K1s and 1099s if they had any contracted work that they hired out for more than $600. I am planning on making some more videos where I go through those examples as well, so you can look for those in the future, and please subscribe for more of this type of video content. Thanks guys for stopping on in, and we hope to see you in future videos. Bye.